Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of a big move in benchmark interest rates. It's the story of the day. The 10-year is now up to 1.85, which is the highest since May and a 150-day high. The worries about deflation have suddenly turned to worries about inflation. The bond markets are taking a caning today, and on both sides of the Atlantic. Two factors seem to drive the sentiment change. Firstly, the third quarter economic growth in Britain came in better than analysts were expecting, and the Bank of Japan said it would be comfortable if long-term bond yields were to rise. In the US, new orders for manufactured capital goods unexpectedly fell in September, driven by lower demand for computers and other electronic products. But their labour market tightened and pending home sales rose, both at rates that beat analyst estimates. The first estimate of third quarter US growth is due tomorrow, and markets are expecting a healthy 2.5% rate, up from the second quarter rate of 1.4%. Any surprises will be market moving. Across the border, it looks like the Canada-EU trade deal has been resuscitated. The EU has resolved its balloon problem, and the landmark deal looks certain to proceed. And that's just days after I reported it dead. In Sweden, their central bank, the Riksbank, is one of the pioneers of negative interest rates, and it held its repo rate at minus 0.5% overnight. They have indicated a strong chance of lower rates in the near future, but these negative rates have turbocharged their housing markets, with prices up 8% and debt rising fast. In New York, the US Treasury 10-year yield is sharply higher at 1.85%. The New Zealand swap rates charged higher yesterday too, especially at the long end. The underlying market message of a steeper rate curve is that a recession prospects are fading. German benchmark rates are at a 5-month high as well, and no longer negative. The US benchmark oil price is a tad higher today at just over $50 a barrel, while the Brent benchmark is still just over $50.50 a barrel. A reason for low oil prices may be due to a Fitch report we missed 10 days ago. Peak oil may not be the issue some think it is. The gold price is down a tad at $1,269 an ounce. China's imports of gold through Hong Kong rose last month, the first gain in the past 4 months when outflows were recorded. Still, this gain was tiny. And the New Zealand dollar is just a touch lower again as well today, now at 71.1 US cents. On the cross rates at 93.7 Aussie cents, and the euro is at 65.3 euro cents. The TWI is now at 75.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.